Hey there, folks. Happy Friday to you. Vegas Trader 66 from AlphaWolfTrading.com coming at you with this week's market wrap video. Pretty interesting week. And today was rather an uneventful day from a highly anticipated jobs report that came in. I would say probably missed expectations, but wasn't a total disaster. So really didn't give us any clear, concise indication of what is going to happen with the rate hike, potential rate hike for September. Okay, so I've gone through the scans. I've looked at the sectors, and I have to tell you, I'm going to say the same thing that I've been saying for, well, this whole time period here. Right now, we don't have any bulls or bears that have total control of this market. We have no conviction to the upside. We have no conviction to the downside. We are just consolidating. We are basing. And listen, it's going at one point, it's sometime soon, it looks as though we're going to have a pretty sizable move. Which direction that will be is yet to be determined. But you can tell by how tight the Bollinger Bands are getting that we are going to eventually have a nice little significant move one way or another. But for right now, I have to tell you, the bulls have every opportunity to take control. And we have not seen anything that is making us say, okay, game over, everything is, sell everything, get out, and go short. We just have not gotten that yet. So NASDAQ, had a little bit of a pullback. Look, we managed to climb back up, reclaim this 8 EMA. All the moving averages are sloping nicely. Shorter term, you've got the 200-day, which is, a ways away, right? I mean, that is a ways away. If we decide to break down, we could easily come down and test that 200-day moving average, and that is somewhat concerning. But, like I said, until we see confirmation of a trend reversal, things look pretty darn good, right? We're just grinding along. And, I know that we didn't get any solid confirmation as to what the Fed will do. Who knows? Maybe they will shock us on, this month and raise the rate a quarter of a point. That is possible. I think they would rather err on the side of caution than upset the apple cart, right? That's kind of what I'm thinking. But we'll see. We'll see what happens. So, one of the things I noticed today, and I really don't pay a whole lot of attention to the emerging markets, but emerging markets had a little bit of a bounce today, right? Brazil, EEM, India. So that was kind of interesting. I found that interesting today going through my scans. I don't know that I really want to do anything there, but it was interesting to see. Let's take a look at, okay, so let's take a look at the dollar. I want to start there because, for the pro members over at AlphaWolfTrading.com, we do pay a lot of attention to the dollar. The dollar can give us a pretty good indication of what's going to happen with commodities, right? And if you follow my blog, you'll know that during the week I had mentioned the fact that we were actually bumping up into some short-term resistance. That was actually this resistance right here. We wound up popping through it pretty convincingly. Had a nice little 3-day pop, and during that 3-day pop, we had some weakness in gold, silver, and the minor ETFs and the triple leverage, right? So this week we were coming up into some potential resistance right around $25 is what we had indicated, and sure enough, that acted as good price resistance, and we got a pretty decent little pullback in the dollar. Then we got a couple of negative reports, economic data reports. We got car sales, and we got the ISM, which was pretty weak, and the car sales were a disappointment. So that was an immediate indication that we probably were going to get a little bit of a pull in the dollar, and probably going to get a little bit of a bounce in gold and the miners. So, and I'll take you there. So on Wednesday, we had pointed out to the pro members that we were piercing the lower Bollinger Band and JNUG. We were approaching this long-term trend line that has acted as support several times, right? Just did a reverse split. Or no, I'm sorry, not a reverse split, but a forward split. It was coming down and testing $16 holler, which is a nice round number that could act as support. We bounced off of there, had a nice little spike. Now, I took actually JNUG at $15.87, I believe, on that morning. As soon as we got those negative numbers, had a nice bounce, and then I just held it the entire day and wound up selling it right at the end of the day. I did not hold it overnight because I did not want to hold it into a binary event. It could have played out extremely well. What my issue was is that we were bumping up into short-term resistance again, and I did not want to take. I just wanted to lock the profit, so I locked the profit. You know, and then we got that weak jobs number, and we got an automatic gap up another 14-15% on JNUG. Was it missed opportunity? Some could say so, but I was pretty happy with the way the trade worked out on Thursday. So, and I reduced my risk. Right, I got to sleep well without having to worry that maybe the jobs number would come out and be this huge, blowout number. So it turned out it worked out really well. Now the question becomes, where does JNUG go from here, right? Do we continue to get a move higher? Listen, we've got a long 3-day weekend. A lot can happen over the weekend. We'll see how things play out. But this was a nice little pop. It's coming up into potential price resistance. So I wouldn't be shocked after the gap up that we would get maybe a pull back. But, we could then just be starting to work our way back up again. We'll see. It was nice to see that it reclaimed the 100 EMA. We'll see what happens. So JNUG and Nugget, I think you want to keep an eye on both of those. Nugget was basically the same thing, had a nice little gap today, but really didn't get any kind of follow through, right? So you either had to be in it from overnight or catch it pre-market because it really didn't have any follow through for the remainder of the day. But it is definitely worth keeping an eye on. Gold, Nugget, JNUG, Dust, JDust. If we do get a pullback, a significant pullback in Nugget or JNUG, you will have an opportunity in Dust and JDust. So let's just take a look at JDX, JDXJ. Same thing, nice bounce. Look, and this is what we're pointing out to the pro members. We were piercing the lower Bollinger Band on GDX, GDXJ, okay? And that gave us the signal that we may have a nice snapback opportunity. Gold also piercing the lower Bollinger Band, actually almost completely out of the lower Bollinger Band. Nice bounce back, nice snapback play. We'll see what happens. We'll see if this is just a dead cat bounce, right? I mean, gold coming up into some potential price resistance. Acted as resistance, acted as support, acted as support, acted as resistance. So see if that acts as resistance once again. I will tell you that the silver Silver actually had a more impressive bounce than gold did, right? Pretty impressive little bounce in silver. Took out this little trend line here. Again, though, coming up into potential price resistance. Acted as resistance, acted as support, acted as support, acted as support. And we'll see if this acts as resistance once again. Now, the one sector that was disappointing this week and still does not look all that fantastic, right? Is the IBB and healthcare. Both very disappointing. All started because of Mylan and the EpiPen. You know, he had some more news come out today about the EpiPen and that, you know, Medicare may have been overcharged or something like that for the EpiPen. What I found interesting about today's action, though, and so let me just take you back here real quick. So during the week with the pro members at AlphaWolfTrading.com, that's right, we were talking about levels of potential key support for the IBB, and one of them was, you know, the 280. What was it? 286, we wanted to see 286 hold the support. That didn't hold. That was last week. And then 283, we wanted to see that hold. We wanted to see the 200-day moving average hold as support, which is this white line right here. And it didn't. It wound up falling below the 200-day moving average. And then it pierced the 100 EMA. But you know what? It held up fairly well. And I think what was interesting about today's action in particular is we had Hillary Clinton talking about putting together a panel, you know, to watch, I guess, you know, watch over these companies and their price increases on drugs. And then you also had the Mylan story come out about the EpiPen and Medicare. You know, if there was a reason to really have the IBB and the healthcare sectors just break down, this would have been a pretty good day for that to happen because of the negative news flow, right? And it held up fairly well. So I'm not suggesting that, you know, we're not going to break down. We'll see. I mean, this isn't a parabolic drop, right? We didn't get out of the lower Bollinger Band. This kind of looks like a bear flag. I mean, it's not looking all that attractive here, and it is below the 200-day moving average. So where am I looking for potential support? Right here around 270, 273, 274, in that area, 272, right? It's acted as resistance. It's acted as support. If we were to back it down here, right, 272, acted as resistance, right? Acted as support, acted as resistance. So looking for that if we do break down below the 100 EMA to come down and test that 272 area and see if maybe we find some support there for a potential bounce. Let's take a look at the IWM. Impressive day today for the IWM. Closed, what? I think at all-time highs. 124.54. Oh, not all-time highs, but closed at the high of the day. Pretty impressive, I have to tell you. Pretty impressive. The other one that is impressive, mid-caps. Also closed near the high of the day. Actually, the MDY mid-cap ETF did close right on the high of the day. So that was pretty impressive on good volume too. So some indications that maybe there's more room to go for the small and mid-cap names. So worth keeping an eye on both of those. Let's take a look at the IYT. And I will tell you one of the sectors that has caught my eye, and caught a lot of people's eyes, is the airline sector, which has been beaten up pretty good. You know, listen, we had a little bit of a bounce in oil today, which wasn't a big shocker because it had sold off pretty good this week, but it was not an impressive bounce. It was not, you know, like a high volume, impressive bounce. It was just a so-so little dead cat bounce. So, if oil continues to decline, now that could put, that's going to put some pressure on the energy sector and some other things. But it could be good for the airlines, right? Which have been beaten up. And if you look at the IYT, which is the transportation, I mean, it's bumping up against this. If it can take out 184 with conviction, I think we get a nice little pop in the transportation sector. So in those names, I think it's definitely worth having those on your radar for the upcoming week. LABU and LABD. So listen, until we get any kind of confirmation one way or the other, LABU and LABD are potential opportunities to take for a trade, right? If the IBB really breaks down on some big volume, you're probably going to see a really nice spike in LABD. And if we get a nice bounce in the IBB, you're going to see a nice little bounce in LABU. So definitely always want to have those on your radar if you start, if you see the IBB really start to move in one direction or another. Let's take a look at, this shipping. They tried to run shippers last week. They tried to run a couple of those low float shippers, and somebody keeps trying to pump those up. And this thing is it's interesting. It looks like, maybe shipping is looking to try and do a little something. I don't know. But so many of those names are garbage names, tremendous amounts of debt. You have to be careful. But maybe somebody is going to get succeed here and actually get those shippers to go on a 2 or 3 day run. It's worth paying attention to. SMH. Clearly to me, the hottest sector out there right now is the SMH, and not such a great day today. Right? Actually, it looks as though we closed down just a little bit, but this thing continues to just grind higher, right? It's riding this 8 EMA right on up. Bollinger Bands are starting to tighten. Look, it's overbought. Let me just see something here. I'm going to look at a different chart. It's got a lot more lines on it. Well, actually, look at that. RSI is... kind of worked off that overbought condition, right? So that's kind of interesting. This is a hot looking sector, man. A lot of merger activity in the space. It still looks really, really strong. It's trading at all-time highs. It's hard to say, hard to suggest that anything is going wrong here right now, right? For right now, it just looks as though it wants to go higher. All right, so let's take a look. SMH, let's take a look at oil. So we talked about the fact that it did have a little bit of a bounce today. It was a little bounce. It was not impressive, right? It had a big 3-day drop, right? So little bounce, not super impressive. 10 acted as support, nice round number. Maybe we get another little bounce up to this 1060, 1050 area, which is the 200-day moving average, and then we move lower, right? So I would be still very cautious in the oil space until, if we could really take out the 200-day moving average with some conviction and get back above there, then maybe I would change my stance on oil. But it's not, just to me, it's just not all. I would have expected a bigger, better bounce than what we got today. XLE, we had a little bit of a bounce there too, but the sector looks like it's fairly weak. XME, or no, not XME. Let's XOP. right? Little bounce off of potential support, price support, which was nice to see, but would want to see some real conviction, some continued strength in oil before I would really want to start getting aggressive in the space. So let's see what else we got. XRT. So XRT, mentioned I think last week that it was looking, this was one sector that was kind of raising a little bit of a caution flag and really didn't have all that great of a week. Basically down, what do we got? 1, 2, 3, 4, 5 days. I mean, it had a couple little pops, but the trend, at least for the short term, looks like it's lower. It did find some support here at 44, got a little bit of a bounce. Now it's testing this trend line, see if it can take that trend line out or if we continue to move lower. Consumer discretionary, it's been trading between these two areas of support and resistance, really just kind of consolidating, right, until figures out a direction it wants to go. XLV, same as the IBB, right? Healthcare sector looks almost identical in chart formation, right at the 100 EMA, acting as potential support. Listen, this 7250 area is kind of a big area, right? I mean, 7250, 73, whatever you want to call it, this little band right here is kind of important. A lot of congestion. This acted as resistance, wound up failing, came all the way back up, acted as resistance, and now testing as support. And it acted as resistance so many times that you would think that this would really act as good support. We'll see if that holds out to be true. If it doesn't, if it breaks down through 72, you're likely going to come down here and test the 200-day moving average, and that by that time, it could also coincide with this trend line here. So, interesting action in XLV. Next week could be a big week for it. We'll see if that continues to hold as support. XLU, a little bit of a bounce. The safety trade, for whatever reason, could come back into play. If gold and silver, and the miners start to rip, XLU also could be a mover. It's worth at least recognizing that. However, look, it's going to be coming up into resistance of the 100 EMA. It's also going to be coming up into the short-term trend line resistance and the $50 holla. If it can't break through 50, it may, we may come up here, bounce, hit this, and then, continue to move lower. So, industrials consolidating nicely. But if the dollar continues to strengthen, gets real strong, that could put some pressure on the industrials. Keep that in mind. Financials actually held up surprisingly well today, even though the data would indicate that maybe the Fed is not going to raise the rate. But financials held up really well, which was kind of a shocker. We'll see what they do next week. It was pretty good volume too. So, maybe the financials continue to grind higher. Those are not really great day trading tools. They're more swing trades and long-term holds, but definitely worth keeping an eye on financials because they do look pretty strong here. So, we already talked about XLE. Let's take a look at the materials sector. I mean, look at this consolidation. I mean, this is just, look at how tight the Bollinger Bands are, right? I mean, we're going to break. We're going to break one way or another. When that happens, I don't know. Maybe it's not until the Fed actually makes the statement and lets us know whether or not they're raising the rate. I really do not know, but pretty impressive. If it can take out the $50 holla with conviction, I think you're going to have one heck of a run in XLB. Volatility. So let's talk about volatility or lack thereof, right? No fear in the markets at all. hard to take a trade here, right? If there's no fear. Piercing the lower Bollinger Band, though, maybe there's going to be some fear right around the corner. Who knows? We'll see. Take a look at the VIX. I mean, there's just no fear out there, right? Maybe we get a big snapback, though. Seeing the VIX out of the lower Bollinger Band. As a matter of fact, I don't think I've ever seen. Isn't that interesting? Never seen this before. Right? Completely out of the lower Bollinger Band. So that could be pretty ominous, right? Maybe there's about to be a snapback in volatility. That could happen. That would catch some people off guard. Okay. All right, so let's look at what else we got. So UVXY and TVIX are both, if some fear does come into the market, those are two to keep an eye on. TVIX is out of the lower Bollinger Band as well. Pretty interesting stuff. All right, so what else we got going on here? Oh, okay, hold on. Home builders. You know, look, if rates do start to raise. So here's a couple of things I think about with the home builders. So we're done with summer, you know, end of summer, right? Heading into winter. So, you know, how I don't think that that's probably a great season for the home builders, right? Heading into the holidays, I just don't think that's a great time for the home builders. And then if we get a raise in interest rates, that's like a double no good for the home builders. So I would be cautious in the space. I mean, I think maybe caution would not hurt. Let's take a look at one last thing here, and that is aerospace and defense, which is bumping up against the $60 mark. And there have been some beaten up names in aerospace and defense. LMT, Lockheed Martin, has taken a pretty good little beating here, you know, and this 238 area that's acting as price support. If this fails, it could come. Lockheed could come down and test this 200-day moving average, maybe even come down and test this long-term trend line. So some interesting action there in aerospace and defense. So listen, here's the deal. So volatility there is none. There's no fear. Didn't really care for those candles being completely out of the lower Bollinger Band. So definitely something to keep in the back of your mind. But listen, a lot of these indexes, the IWM, the mid caps, the SMH. Did we look at the S&P 500? I might have looked at it, but you know what? I'm going to go ahead and look at it again, just for the fun of it. S&P 500 reclaimed the 8 EMA. The 100 or the 50 EMA acted as great support, which happens to coincide with price support. So, pretty decent day in the S&P 500. So, like I said at the very beginning, I don't think that we have had anything to come out and say to us, it's all over. We've got a big, reversal, and we need to get out and go short. So right now we're just in consolidation mode. It could stay that way. Listen, we could stay this way until the Fed meeting which is the third week of September. So I think it's that. I'm not sure. But it could just continue to be a very choppy market. Right? So for the most part, I think that things still look fairly bullish. There's some great looking sectors out there. And that's it. That's it. That's where I'm at. I hope this was helpful. If you like what I do here, come check out alphawolftrading.com. Free chat room to all, and also a very comprehensive educational program. I do these market wraps every single day for the pro members of Alpha Wolf Trading, and do trade reviews and 10 hours of educational video programming. There's a lot there for a very, very reasonable price. So check it out if you like what I do. And listen, have a fantastic, awesome, tremendous Labor Day weekend. Have fun, be safe, spend time with the family. I will be doing stocks to watch Sunday morning, 8 a.m. on Ticker TV. If you've got some stocks you'd like me to go over, send them to me, email them, tweet them. If you can make it, awesome. I'll see you Sunday. If you can't, because of the holiday weekend, completely understand it. So for some of you, I'll see you Sunday morning. And for the rest, I'll see you all next week. Enjoy your weekend. Enjoy the holiday. Be safe. Have fun.